welcome to the Australian Stock Market Show. Tonight we'll share with you some of the sexiest retail stocks on the market for 2023 and whether now's the time to be the contrarian and buy. And on top of that, we've got plenty of other stock opportunities to get into as we help you to make better, more informed decisions. Hello, I'm Janine Cox, your host for tonight, and joining me is Gillham, and we're Australia's most trusted stock market educators. How are you this evening?
I'm good. So we're going to cover Victoria's Secrets?
No.
Oh, Sexyland?
No.
Well, you said the sexiest stocks, retail stocks.
It is a parents' GP-rated show.
Well, what?
So
but you said the sexiest retail stocks, so they're not.
That doesn't mean that. I don't get that picture. Obviously, you got a different picture to me.
I don't know. You use the word, not me. But I was getting quite excited about all that. But if we're not going to cover Sexyland and Victoria's Secret,
you just have to settle for Woolworths and maybe Harvey Norman.
Maybe Bonds or something like that. How's that one? No? God, gee whiz, okay. Janine. All right, I'll keep my mouth shut and I'll wait for those sexy stocks.
Now, I have a quote for you all tonight, which comes from Gertrude Stein, who said, "Whoever said money can't buy happiness simply didn't know where to go shopping." We're talking about retail tonight, but you are not much of a shopper, really, are you?
I think most guys aren't much shoppers because we don't like walking around shopping centres all day long. I have a rule: let's go shopping.
Right.
With my wife.
What is it?
1 hour, stop for coffee. 1 hour, stop for coffee. 1 hour, stop for coffee. If we don't
awesome.
do that, I don't go shopping. No Boxing Day.
Yep.
No
sales rush days.
Stay away from it. I'd rather do something else.
I agree with you.
So that's my rules for shopping, all right?
Awesome.
All right. All right, okay, but before we do get into our first segment for tonight, I do need to make an announcement. If you are watching this stream live on talkingwealth.com, then you can just sit back, relax, and enjoy the 75-minute show. However, for those of you watching this live stream after it already has aired live, there is a delay in having the stream available once we finish. As such, the live stream can take about an hour or so to finally be available in talkingwealth.com for you to watch on demand. But now it's time to get back into the show. If you do have a question that you're dying to ask Janine and I, then all you need to do is simply text us on 0423 959 846. That's 0423 959 846. So make sure you pick up your mobile phone and get texting your questions now.
While we wait for your text, it is the fourth Tuesday in the month, and this means that we normally take a look at the world currencies. So let's get into the charts.
Oh, cool. On your screen right now is the watch list of the world currencies, and this is set on yearly, correct?
Now, do we cheer because the Aussie dollar versus the Japanese yen's on top? That means you can go to Japan.
Oh, it's only this year so far. I can plan it out.
Yeah, I know you can.
I was actually watching a thing on Japan earlier today, but anyway, I won't talk about that because it's off topic.
Oh, really? Is it?
Yeah, it's secret.
Oh, okay.
I do want it, but I did see a lot of ads in the newspaper. I was sitting there on Sunday's newspaper, you get the holiday thingos, whole lot of holidays for Japan, and I go, which one can I book?
Okay. Now you can too, because it's getting extra 2.7%.
For this month, or this year.
This year. Okay, the Australian dollar versus the New Zealand dollar up 1.82%.
$1.09, so that's pretty good.
Yep. Aussie dollar versus the Russian ruble. Actually, we're up 0.23%.
Okay.
Almost line ball there. The Aussie dollar versus the Swiss franc. We're going to talk about that one tonight. The chart looks quite interesting. Yeah, I think that'll be one to talk about. And the Aussie dollar versus the US dollar, we're pretty flat there, minus 0.1%. So
67 cents, that's
not
pretty normal.
Different, but Aussie dollar has been down. So it'll be interesting to see where we come out at the end of this year, but obviously it's early days yet. Aussie dollar versus the euro down 0.3%. And look, as we go down, we're looking at the Aussie dollar versus the Asian markets.
Down against all of them.
We're actually down, so they're actually doing better. So Aussie dollar versus the Canadian dollar down 1%.
Well, I'm not going to Canada this year, am I?
Well, I don't think 1% really is going to make much of a difference to you, is it?
I think I'd want parity on that. It's only 91 cents for every dollar I got to spend. So how am I supposed to get good snowshoes cheap?
Yeah. I can see what you do for shopping. It's just a real challenge, isn't it?
It is a real challenge. So what charts are we going to have a look at?
Okay, let's just have a look at the Aussie dollar versus the Chinese renminbi yuan.
Well, this is an important one for us, isn't it, really?
It is, but I mean, if we just look at the history of this, there isn't much where the currency goes sideways before it starts to move off. And we're seeing one of the longest moves sideways. This started back in, was it March 2022, and we're still sideways. So now if we go back to January 2019, before COVID hit, the same sort of thing. It was a sideways action there all the way into December. So again, it's the same sort of timing, but I'm suggesting that we're very close to breaking out of that.
Well, you never know, because obviously, with the COVID situation in China, things like that, things are starting to open up around the world as well. So we may see a bit of a move in that sort of area. And if we got a little bit better relations, should I say it, relations with China in terms of our, they with the iron ore and all the things that they put tariffs on. If that starts to reverse, we might see some movement across, the difference between the Chinese renminbi and the Aussie dollar.
Okay, well, look, just talking about that, this is also important. Obviously, we look at the Australian dollar versus the US dollar regularly, and I've talked about this repeatedly about the percentage moves that we really need to keep an eye on, because there is some consistency there. And we'd said before that we thought that the Aussie versus US is down enough, but what surprised me is the strength of the reversal that we've seen this month. It's actually, let's just have a look at the weekly move. It's pulled back all the way to almost to these lows here that occurred December and in November. We're seeing the same sort of pricing there, which is interesting.
Do you think that's a reaction? I mean, obviously we've had 9 interest rate rises in a row. The US have been raising interest rates as well. I know the Fed have been making announcements in the US. Do you think this is a reaction to those sorts of things?
Oh, that's definitely got something to do with it. And what I'm looking at now, though, is to see whether this level across here, which is 66.8 cents, whether that's going to hold. We know that our currency does like to be around there, but it doesn't stay down for very long before it tends to move up back towards that.
I know the RBA likes it around those sorts of levels, doesn't it?
Oh, 65 if they can get it.
65
70.
God, it's terrible if I want to go to the US.
Well, you just have to fork out extra, won't you? Or maybe wait for another year.
Thank you. I was looking at going to the US. All right. I'm going to hold it off a little bit.
Okay. All right. Well, we've also got the Aussie dollar versus the Swiss franc, which I thought was interesting to take a look at.
It does look like an interesting chart, doesn't it?
Yeah, it is. So, I mean, if we just take a look at the big picture, there's this sort of push down, consistent push down here. And I would expect that to finish, though. I think that over the coming year or so, I'd expect that this will settle down and we'll start to see another move back up again. But it's just a temporary move down at the moment on the Aussie dollar versus the Swiss franc.
So how are we going against the British pound, though? I mean, the important ones for us are China, the US and the British pound generally, aren't they?
Yeah, I mean, we could have a look at that as well. Is that what you're asking?
Well, I'm just asking how we're going against it.
Okay.
Is that a tough question?
We did talk about this one. I think that was last month, so that's why I was sort of wondering, we're going to talk about it again. But at the time, you and I thought, well, maybe it's got the chance of taking off, given the strength in the move in September 2022. But this month, again, we're down. So a move below that low would be a bit of a concern if we go through that December low.
All right, so anything else you want to say about currencies?
No, I think we're done now.
We're done on currencies. That was a nice short and sweet, isn't it?
Yep.
Sort of like me.
So, really? Oh, short and sweet?
Yeah.
I wouldn't say you're short, but anyway.
Okay.
That is it for our thoughts on world currencies.
Okay, for those watching us on YouTube, just a reminder that you'll see only part of this live stream. However, you can still participate in the show by emailing us your questions, which we'll answer in next week's show. So if you do want to see the live show or the full live show, you will need to head over to talkingwealth.com and subscribe. With subscriptions at just $3.54 per week, this has to be the best investment you can do for yourself. Now, let's get into the first email question we have for tonight. Now, we have an email from Ahmed, and Ahmed has said, Dale and Janine, what is your view on TMT? QPM and INR. Cheers, Armour. Now, normally we would only do one stock, but are we going to do more than one tonight?
This is a special night, isn't it?
This is a special night. Okay, Janine's
The
allowing you
producers
to
actually
see
said
all three stocks
we
tonight.
can do, yeah, because they were quite interesting shares. I mean,
Okay.
Technology Metals Australia is the first one, TMT. It's had a great
quite
run.
liquid, isn't it?
Look at the rise that we've seen, and this is what was one of the interesting things about it. It's actually risen 950% from that low in 2020, the COVID low. And then from this low here, we've seen very much a nice move up there as well. I'll just drag this across so we can see what's going on. Now,
Yeah, no, it drives me crazy
Oh,
sometimes.
gosh.
I can't pick that up. So
there we go. It's around about 400% move there. So still some really serious moves there for this stock. But at the moment, I just think that it's going nowhere and is more likely to fall.
yeah, but yeah, I agree with you. I totally agree with you. I don't understand why he would be looking at this stock at the moment. It just doesn't look smart. It doesn't look like a wise investment to me. And yeah, it's been. How do you make money on that unless you are super
Short term.
Super short term and super switched on type of trader who's highly skillful? Otherwise, you're just risking your money.
Yeah, I mean, it's nearly 2.5 years sideways.
Yeah, and how many times do we see emails from people that have bought stocks like this and they say, I'm down 50 to 90%?
This is where people get sucked in by reports that are written about shares. Brokers put them out, or somebody's put these reports out.
Yeah.
And really, it's about someone's distributing that stock. They're selling it off.
So many. This just looks so illiquid to me.
Yeah.
So I wouldn't get into this one. So you want to talk about the next one?
Actually, I met some guys years ago. You know, when we went to the conference, to the small cap conference.
Which one? I went to
it was one of the ones we went to years ago, and I met
for years.
Yeah, and I met a few guys at that conference, and they said to me that they trade these sort of things all the time.
Yep.
So they have to.
But they're fund managers.
No, they weren't fund managers. They were individuals.
Yeah.
Right. So they actually look for the opportunities. They do a hell of a lot of research into the company before they do it. But they buy in small parcels for a bit at a time because they can't buy in big amounts because it'll move the price too much. But then they have to be patient in being able to distribute, and sell it off when they're ready to sell. So they don't hold them forever. They get out. So those sort of people might be holding reasonable parcels of shares like this, but then distributing.
So you say they ease in and they ease out.
That's right.
They just don't buy and then sell.
Correct, yeah.
They ease in and ease out. All right, so what's the next one?
Okay, the next one.
Actually, I missed the microcap conference last year because I couldn't go.
The next one is Queensland Pacific Metals Limited. Now, we've seen this stock also being distributed or falling away quite heavily. Now, you can see there that recently we've seen a significant sell-off, so let's just have a look at that. Now, it was really illiquid. It's becoming a bit more liquid. You can see the volume has improved since 2020, but it looks like it's falling again. Over the last year, the volume's dropped off again. Yeah, I don't like it.
It really does look CREP to me.
Yeah, and this is a good one, though, to talk about because a lot of investors new to the market get sucked into these sort of low liquidity stocks and then have no idea where they're going because they're not necessarily looking at charts, they're just looking at the fundamentals. But this is clearly in a downtrend right now.
It's certainly not cheap.
No.
I mean, it's at 10 cents, so people might think it's cheap, but that's certainly not cheap because this looks like it's going to head way, way, way lower.
It could.
It doesn't look good to me at all.
All right, so should we move to the next one?
Well, I want to see something that's exciting.
Well,
and that looks the same.
They all look the same, don't they? So Ioneer, so if he got interested in these shares because a broker's putting these reports out, mate, they're just using people to buy the stock.
Well, it could be a broker,
help other people
or it could be a chat forum that he's picking these up from because
it really frustrates me when this sort of thing happens, though.
So tell him how you feel. Don't hold back.
I'm really wanting to encourage
you
to stay away from these shares that are falling like that. That's really important for your long-term, profitability. So this one here, Ioneer, it may turn up again at some stage. We'll just have a look at the sort of moves down.
Well, we don't know whether he owns them or whether he's just looking at buying. He didn't say. He just gave us the 3 stock codes. So to be fair, if he hasn't bought them and he's looking at them, then hopefully he's listening to what you're talking about.
Yep.
To go for better stocks.
Now, if this falls a similar sort of degree, I mean, it's possible it could even fall back towards this level here, which is about 70%.
So if he owns them, what would you be saying to him?
Well, I'd be really concerned right now, but what percentage of the fall is already over? Probably about 70% of it, potentially.
But you've still got more to come.
Yes, potentially still more to go.
All right. Cool, all right. But Janine, I think we've now got a text to actually go to
That's
today.
exciting.
So our first text is from, looks like Marlene is sending us a text, and her question is about share purchase plan for Red, the stock called Red. She said she bought it at 18 cents. It's now at 13 cents. Is it a good buy? No, it's a good buy, I think, Marlene.
I think so.
Not a good buy. It's, yeah, look at that. That's terrible.
Wow. Yeah, that is terrible. I just don't even know how. I'd love to actually hear from Marlene to find out how she actually got onto this thing and why she's even interested in it.
It looks crap.
Yeah, I mean, if it goes, it could even go below 10 cents. We were talking about that other stock below 10 cents, that the sort of fall it's had. Temporarily, it might just shoot up to test around that 16 cent mark, but before it has the potential to drop away. But look at the selling volume.
She titled her text share purchase plan. So I'm thinking...
Does that mean a proper share purchase plan, or does that mean she's actually planning on purchasing these shares? Or?
Well, no, she's losing money. She said she bought it at 18, it's now 13.
And now they're offering a share purchase plan.
She's down 30%.
I'd tell them to stick it.
That's what I was thinking. That they're offering a share purchase plan that maybe she could try and dollar cost average or reinvest her dividends or whatever else. So, yeah, I'm with you. I'd just say, Maureen, not
it's
a good
about
stock.
Risk, isn't it, at the end of the day? Why would you put more good money after bad in a stock that's not proving itself to be going in the right direction?
But this is so common, isn't it? These sorts of stuff, and we haven't planned this. This is two people in a row with stocks that they probably shouldn't have been or trading or even looking at.
And the other thing to think about too is if a company's offering a share purchase plan and whoever's even remotely interested in this share is taking up those shares, why would they buy them on the market then?
Correct. But how many times you're saying things like that and people go, all right, it's dropped, I'm down 30% or 50% or 90% of my money, I'll buy more of it now. And then they watch their share keep going down or just go sideways and nowhere for the next 2 or 3 or 4 years. We see that constantly.
Yeah, we want to help you to stop doing that.
Yeah, this is not a stock I don't think anybody should be owning at the moment.
I agree.
From that point of view. Anything else you want to say?
Look, it doesn't mean it won't come back again at some point. I wouldn't write it off completely, but right now I wouldn't even.
But this is why you need to have stop losses and things like that. And this is what we talked about in, like our podcast that we released last week about selling stocks. When's the best time to sell stocks and selling
that's a good
stocks
one.
that people can do. So talking about podcasts, it's there. It's free. Anybody can listen to it. It's also up on our YouTube channel, wealthwithin.com.au. You can go and actually watch Janine and I actually recording our podcast nowadays, which is something new that we've been doing. So, but go and have a look at that. I just wouldn't be in this stock. Principle one, I think you should be picking better stocks, and I think the last two people asking questions should be sticking in the top 50. Outside of that, it's just, from that point of view.
Even the 100, but outside of that, it just gets...
No, I'm going one. If they're picking stocks like that...
they need to come right back.
They've got to come right back because they're in the wrong sort of stocks. But anyway, now it's time for our topic, Janine, for tonight, which is all about what's hot and what's not in the retail stocks. In the retail stocks. And we will share our best picks in this category. Now, I can assure you this will be an interesting evening. Remember, Janine used the word sexy. Whether you like shopping or not, this is about making money, and at times, believe it or not, retail stock can be hotter than mining companies.
That's right. So get ready for a bit of retail therapy, stock market style, and I think we need dramatic motivational music at this point.
Well, at least you didn't ask me for a drum roll.
Well, I've asked you to bring your guitar in numerous times, but you refused.
That's not dramatic music.
Oh, okay.
That might be.
I could play on the drums for you.
That could be noise pollution.
You'd have to have something blocking your ears, though.
Can we move on, Janine?
Sometimes you make me want to drum the drums.
I want to get to the charts, Janine, so let's go.
So retail is all about jingles, isn't it? The bells and whistles, signs that say 50% off.
Don't you hate those? It's 50% off the pencil in the corner.
It's just like a blur to me. I don't.
Just if you walk into the shopping centres, you see that everywhere. That's 30% off, 50% off. I read one the other day where I was somewhere with my wife. We're in Geelong. Went and saw Sting on Saturday night in Geelong, and we went to buy. We had to buy a pair of shoes for my wife. because she left her shoes
So
at
you
home.
did some retail
So we had to buy
therapy.
some shoes and a handbag, but it said 50% off, and then you read the fine print off the second pair. So I don't like shopping. But anyway, but Janine, I think we really do need to move on. So it's enough of me waffling.
Okay, enough of Dale waffling, I can say that because he just said it. How about we get into the opportunities? Actually, first up, we'll take a look at what some of the industry have been talking about recently. Right now, they're concerned about the impact of 11 consecutive rate rises that have not yet been fully factored into people's spending. Now, and a recent announcement that came out from the Australian Bureau of Statistics. So let's take a look. What we see here is that retail sales were down 3.9% in Australia for December. However, retail turnover remains elevated and was actually up 7.5% through the year. The large fall in December suggests that retail spending is slowing due to high cost of living pressures. Retail businesses reported that many consumers had responded to these pressures by doing more Christmas shopping in November to take advantage of heavy promotional activity and discounting as part of the Black Friday sales event. Dale, I know you love a good sale, so did you grab a Black Friday bargain?
Very simple answer. Nope. I couldn't.
Not even online?
No, I just can't be bothered. Getting online and trying to sort through all the stuff, and it's like, yeah, no.
No. You just buy it when you need it.
Yeah, no, I just buy when I need it.
Okay. Now, Dale, there's something else that
I'm excited. I'm waiting.
Okay, that I would really like to share. We know retail spending is seasonal. We also know about 50% of all spending has historically been around the festive season, but it seems to change. And last year, particularly, if we have a look at that, we have data in a graphical form showing retail turnover and prices going back to June 2021. Now, Dale, I know that you'll be keen to see this one, more about the retail stuff, hey?
Well, yeah, I mean, obviously we get seasonality in the stock market, so because we talk about that all the time, seasonality and things happening, etc., but you also get seasonality in shopping trends. Obviously, December is a better time for shopping because people tend to shop at Christmas time. They tend to shop at other specific times of the year. You know, Boxing Day, not Boxing Day sales, what is the one? The end of financial year sales. So I think, and you said it, 50% of retail spending happens pretty much at Christmas time.
Well, look, I mean, it's interesting to see that the December period was down this year, but it's not uncommon to see that. It was, I think last year in 2021, it was actually down as well. This year we've seen a much more steady level of retail spending across the year. Whereas in 2021 it was far more volatile, and we saw a lot of periods in the negative, which, you know, that sort of was concerning the market a little bit, because the market's always hanging on to what's happening with retail, isn't it?
Oh, it is, and I know what you're talking about. I mean, you know, in years gone by, we weren't online as much. So now people are looking for bargains online. You've got those shopping portals where they look for the best deal for you, and you can order online. But I think I remember I was saying to you, my wife dragged me to watch the Myer Christmas windows, and she went into David Jones and Myer and everything else. And I was at Christmas time, and I'm thinking, where's everybody's shopping bags? Like there were people around, but normally you see them, you know, carrying multiple shopping bags, but nothing was happening. You know, I'm thinking,
So you think that they're keeping it all in their wallet?
Well, I'm not necessarily keeping in their wallet, but I think they're being a lot more astute in their buying and knowing that the retailers, you know, they inflate prices at different times, and then they get, you know, like if a shirt's normally they want to sell it for $20, they tell you the retail price is $40, and then they say you're getting 50% off, but they're still getting a full retail price that they want.
Right.
Those sorts of things happen, and you get all these.
So it's not a real sale, is what you're saying?
Oh, yeah, so many times that my wife's dragged me into these, you know, sort of, you know, into financial year sales, and I go, I wouldn't pay that much for the shirt at full price normal, let alone at the discounted price on the rack, you know.
Okay, so she doesn't like going shopping with you then?
No, she does. I'm not a Grinch like that. As I said, it's fair enough. 1 hour, have a drink. That's fine, as long as we can have a bit of fun. And I'm not standing in women's lingerie for an hour and a half waiting for her. You know, it's not a nice look.
Okay.
So, can we get back to what we're doing?
Peeking
here?
over the racks. Yeah, I can just imagine.
Look, you know, it's like every man, like every shop, every female shop should have seats there for the guy. Not all of them do.
And a TV screen.
Not that I don't care about a TV screen, but at least a seat.
And a beer.
Well, that'd be nice too.
Okay. Maybe that's something Maya will look into. They're a bit progressive, aren't they?
I hope so.
Great point. You made a few great points there, actually. And it makes it so much easier to actually see what's going on when you're looking at a graphical chart like we just looked at.
That chart just says it all, doesn't it? It tells you when people are shopping and everything else. So, because as they say, a picture says 1,000 words, and using a graph to actually explain
rather than just reading a headline.
Yeah, correct. And, you know, and obviously we do hang on retail figures for the, you know, announcements to see what's going to happen. So whether we buy retail stocks, you know, but to me, people, you know, they're always going to announce these great sales at certain times. But it's also an indicator what the economy's doing. So
that's so true. Now, Dale, a discussion about retail would not be complete without looking at the sector.
Okay.
So how about we take a look at the consumer staples first, and then we'll get into the consumer discretionary sector. Because all of the stocks that we're going to look at tonight are in these sectors. Let's get into the charts and see where these sectors are headed, shall we?
Okay.
Dale, you can drive the mouse if you like.
I get to drive the mouse.
And give everyone your thoughts. Aren't you feeling special?
So we've got the consumer. Well, I am, but I'm always special. Look, I actually like this. I mean, you can see here that what we're talking about here is the consumer staples. It's, you know, from August. It fell away, but it really hasn't fallen too much. And even though our market has been more bullish since around October, it got down to that low. They're about 18% down into that January last year, which is a lot of the market. January was the all-time high on our stock market last year. So, and we haven't breached that yet. We're getting close to breaching it.
Look, we've given this sector plenty of opportunities, and it has failed at so many times. Look at how many times it's tried to trade higher. So why would you bother?
Well, I get disappointed in retail shopping all the time, so I'm not sure why the chart should be any different. But, you know, at the moment, it has tried to push up through here into April.
It's tried to staples, push up. Though. We're talking about Woolies and Coles.
Yeah, that's fine. I still get disappointed with them too. Okay. I go and squeeze my oranges, and I don't. Well,
there's no juice coming out of it.
Ain't no juice in them. My bananas go, and you open up your packet of beans, and they go mouldy within 3 days. So don't get me started.
Right.
Okay. But obviously the market started to take off in June, and here the consumer staples went up for a couple of months, and then went back down into that October low, and then they took off again. So really it does need to see a bit more, but that's looking strong compared, you know, we're seeing a bit more of a bearish last few weeks in our market. So that's looking good. I do like it.
Yeah, but it's interesting when the rest of the market starts to get sold off, these go up, but then in an environment where everybody's really after growth, but they don't know it yet, because a lot of people don't realise this is part of a bull market.
Yeah, it is.
How strong are these likely to be then in that sort of environment where everything takes off again?
Well, that's the question, and obviously with interest rates and expenditure going up, obviously energy bills are going up, all that sort of stuff. And so when you're looking at running Coles and Woolworths and those sorts of shops, they do take a lot of energy. You know, obviously the transport, the list just goes on of things that can affect the price of the goods that they sell. But they're trying to maintain their margins through there anyway. So, but how are they passing on all the cost increases, or are they absorbing some of that? And some of that is a bit of an unknown intangible for us. But, you know, we do need to consider this has been, you know, it's been moving sideways for a few years. So maybe it's time for it to break out, but it is looking better at the moment. So now let's look at another one. So this is the consumer discretionary. This doesn't look as strong as the other one, does it?
No, not as strong as the other one, but it's had a bigger pullback, which to me means more potential upside.
Always means more potential upside.
And this is dominated by Wesfarmers, so we know that you know that the chart, especially in more recent times, it looks very similar to what Wesfarmers looks like.
But if you look at just using the momentum on this, and you just see it's really just coming back to its momentum more recently, the longer term momentum way back from 2011, and obviously through here from that October move. It's moved up. This month's been a little bit more bearish, February, but not overly bearish. And it's gone above here, so there is potential there in this market, and to me I think you're probably right, that's why we've got more potential. And at the moment, if we look at the weekly, it's only a few weeks down, not too much. It hasn't come off too much here, so if we do see a turnaround,
Well, it'll be interesting to see whether we think the sexiest stock's actually Wesfarmers.
Okay, but I had a look at Wesfarmers today and I'm getting mildly excited. I won't say super excited, but
Most people get
mildly
excited when the stock's rising and you're getting excited as it's falling.
Well, look, it started tickling my fancy, if
Right.
I can say that, because you used the word sexy, so I can say tickling my fancy.
Yeah, I think I want to get back to the charts now.
Okay, will you get back to the charts now?
All right.
Cool.
Now that was interesting, wasn't it? Then, thanks for sharing, by the way.
My pleasure.
I felt really relaxed, me sitting back and you doing all the
You let me
work.
do all the work and you can be relaxed.
The next step we need to take is to drill down into each of the relevant subsectors.
Well, that's a great idea, Janine. I really do think so, but...
Now, I do have some good ones.
You do?
Okay, what else would you like to share first before we go on? Anything else?
Well, I mean, I think our viewers need to know that within the consumer staples and the consumer discretionary sectors, there's a number of subsectors, and retailing is just one of those subsectors because they're pretty broad sectors, aren't they, these
They
things?
are.
So, and retail is only a component of each one of those. I think they need to understand that. So it can make it a little bit difficult finding the right stocks in those.
Yeah, I agree. And thanks for that. Can you imagine if they didn't split the stocks into those subsectors, how it would be for us, sifting through all of those shares?
It'd be almost impossible. I know when I was looking through, even the technology sector, you look at it and there's different types of technology there. So if you're looking for a specific type, narrowing down into that selection of I want to look at retail stocks that are more into clothing or more into food, more into whatever the areas that you think are going to benefit from whatever the current environment is, to me, unless we have those subsectors, it makes it really, really difficult. It really does.
Exactly, you hit it on the head there, and you can feel like a kid in a lolly shop at times when you're looking at stocks in the stock market. We know this can happen with some of you out there, and we see people go into confusion when trying to decide which stocks you want to buy or want to look at, and that's why it's important to first take a bird's eye view of the sector.
Yeah, it is. I mean, too many. Well, so often we get questions about how to select stocks, and to me this is what we do. How do you select stocks and how do you create a watch list? And as we find, many are really, really confused about how this area, instead of just picking a stock, how do you do that? But our students watching tonight, they all know that we teach how to do it in a way. We do that in our diploma course, so it makes it just so easy to really grab that watch list together and narrow it down. So, but Janine, what have we got? I mean, I'm getting excited about these sexy stocks. So what do we got? Are we getting any closer to having a look at the charts tonight?
No, it's me that just wants to get in the chart.
I just want to get
Gee, you seem impatient tonight, don't
I'm
you?
always impatient. Soon I'll get grumpy.
Yeah, I know. Okay, we had better get into the charts then just to settle him down. So first up, I have a couple of tables to look at.
All right, so what are we looking at here? So you're going to bring up the tables.
Okay, first of all, just to keep you in suspense, so food and staples retailing, this comes under the consumer discretionary sector. It's one of the subsectors. So I've selected 4 stocks out of that. There aren't many in there to choose from actually, which makes it really simple for anyone looking in this space. So we've got Coles, Metcash, Wesfarmers and Woolworths to name the big ones.
Yep.
And if we look at the market capitalisation of those, we can see that Wesfarmers is obviously the mammoth in there, and so is Woolies. So we can see how these will dominate the overall chart. But Coles Group, actually underneath all of that, is half of what Wesfarmers is, and Metcash is, is diminished by the bigger ones completely. So look, I just wanted to talk about the PE ratios and how high they are at the moment. Now, PE ratios do vary depending on the data that you're looking at and the specifics about the PE ratios, and same with dividend yields. So I thought it would be interesting to see that if we're talking about PE ratios around 20, we're not talking about growth stocks.
No.
We're talking about staples.
Yeah.
And the PEs are high. So that's not normal.
No, I think that's been a sign of the time over the last couple of years.
Wesfarmers would be the exception,
Yeah.
because it's got some growth areas within the business that's different. But for Coles and Woolies, I don't think that's justified personally.
Look, I don't think so either. But as I said, it's, what we've seen the last couple of years, I think is becoming a little bit more normal. Now, maybe abnormal eventually. Again, we might settle down, but I think I've seen some pretty unusual PE ratios
We
the last
have,
couple
haven't
of
we?
years. Some
With a minus really
doozies.
low. Yeah.
And it's confusing a lot of people too.
It is.
It's really people going, well, normally if you have a PE of this, you should be buying. And I went, well, yeah. There's
Well, dividend yields
are
are
more to
okay.
trading than PE ratios.
Yeah, so these dividend yields look okay. I mean, they are different depending on what data you're looking at and when the price moves up. But yeah, so I mean,
Well,
some of those are
with
quite
an
healthy,
average.
but they
Yeah,
can
that's-
change obviously with reporting season. Some of the companies have come out and announced that the dividends would be slashed. So I just think before we get into any more, did you want to?
Well, didn't you have two thingos you wanted to say? Show?
Yeah, I've got one, so I've done one.
Oh, okay. Anyway, Janine, but before we do, before we get into more stocks and share our view, we do need to say goodbye to our YouTube video viewers. YouTube viewers, if that's you, then you can still watch the whole 75-minute show by heading over to talkingwealth.com and subscribe. As I mentioned before, it's just $3.54 a week, and for that you can watch this show in full. And also our stock market update, which happens, well, both of these shows happen every single week, along with a wealth of knowledge from hundreds of interviews from leading experts on a range of topics, from investing, retirement, business, success, entrepreneurship. The list just goes on and on. For YouTube videos, viewers, you can still send us an email for us to answer
You
next
did a recording
week.
today, didn't you?
Just email info@wealthwithin.com.au.
You did a recording today, didn't you?
Yesterday.
Was
I
it
got one
yesterday?
tomorrow.
Fantastic.
Another interview, yeah.
For those watching on talkingwealth.com, then stay tuned as you will love what we have in the next part of the show, as we have more stocks to cover along with a host of other great content. We'll also have lots more questions to answer, so stay where you are, as we'll be right back after this short break.
Maybe we're getting a little bit of a sign that the market could be finding some support. You can see here on the monthly chart here on the right here, the market's come right down into this low back here, but since then it's been really, really nicely bullish. It opened, tried to push up a little bit, and then it's coming down near its low. So February will close somewhere down near its low, but it's nothing too bad. This is quite a nice little trend. We've had a movement up 1, 2, 3, 4, 5 months here. Of that 5 months, we've had one down month there. Whilst we still have a chance of coming back to this dashed line, we will eventually come back to it. I don't think it's going to be now. We've also seen other stocks that make big announcements about great profits, but then they fall out of bed. And so why is that? Pretty much the answer to that is that big institutions are buying stocks for the long term. That's what they do. They're buying in the hope of great profits coming up. So they're looking at stocks when they're fundamentally undervalued. They're not doing really, really well. So they'll look at stocks like this and they'll look at them for holding them for 2, 3, 4, 5 years or more. They're not looking for shorter term, sort of, 3 days, 3 weeks, 3 months, to 9, 18 months or even 2 years. They're looking longer term. And so what they do is they buy into those stocks, and the best time to sell them is when everybody else wants them.